Canaccord Genuity Chief Market Strategist Tony Dwyer, who joins us now. Tony, great to see you as always. What do you make of the short-term levels, the fact that we went below Friday's low during today's session, and if that spells the likelihood of a bit more of a pullback still to come?
Well, if I'm more about the conditions than the exact level, I don't think in the world of algorithmic trading and quant and index funds, I think it's really hard to pick a quote unquote level like back in the day when I got into the business. So and the conditions that we're looking for on Friday were met. If you remember, we had upgraded the market in early October, and then in early November, I mean, you had optimism that was near all-time highs in the National Association of Active Independent Managers Exposure Index and other, real active money management readings. And we said that if we get certain conditions that are oversold, we should have a pretty good year-end opportunity, especially given all the stats that you guys have covered so well throughout the last few days about what happens during strong years. So it would be historically unique since 1950 for the S&P 500 to be up 18% through the end of October and be negative on the final 2 months. The median risk is about 1.29% from the October close. We're now down about, 0.75% from that level. The median risk is 1.29%. And the median gain is 6%. So ours is a conditions versus risk reward. And Well, Sarah, how many times do people like me come on and say we want to buy the dip, and then the dip comes, the conditions are met, and of course there's something that has a fundamental feeling of change. I think it's good to buy the dip for the year-end opportunity, given those conditions in the history of how the year ends in strong years.